Let's round up all the business news now. And markets ended with marginal gains after a volatile day of trade. Markets witnessed profit booking in the last hour of trade. The Sensex ended above 65,000 mark, while the Nifty slipped below 19,400 level. Realty and metal sectors rose the most, while banks were the top loser. Hiral Dadia with a wrap of all the market action.
A day which was absolutely range bound, and we saw narrow moves, actually saw profit booking in the last hour of trade. Indices erased gains amid volatility, and this is ahead of the expiry tomorrow. You have Nifty which ended below the 19,350 mark, as well as if you see in terms of Bank Nifty as well, that underperformed the benchmark indices in trade. In fact, Bank Nifty saw cuts of little over 600 points from the day's highest levels. It was the top losing sector as well in trade today. In terms of other sectors, you had Nifty Metal, which continues to be the top gaining sector for the second and the third consecutive session, and this is on the back of the commentary that we've been hearing from China. Indicating in terms of the Bankex expiry, what BSE has come out and said is that that will be moved to Monday from a Friday, and this will be effective the 16th of October. So that was an interesting comment that we heard in terms of the F&O markets. Let's look at the top gainers. You had names like JFS, Tata Steel, auto names ahead of the auto sales numbers that will trickle in on Friday. You had Maruti, Eicher Motors, as well as M&M that were the top gainers. Whereas on the losing end, you had names from the OMC pack, which is BPCL, DRL, SBI, as well as a power grid that were down in trade. Looking at the newsmakers, NTPC for the approval that they've got for the Lara Super Thermal Power Project was in focus. Titagar Systems was in focus on the back of an order win. MTAR Technologies has got a defense license from the government. Shakti Pumps on the back of an order win jumped in trade. Ramkrishna Forgings was up in trade on the back of an order win. Gokuldas Exports, a second consecutive session of an up move, and this is on the back of the acquisition that they've made. Apart from that, India is likely to impose anti-dumping duty on toughened glass from China, on the back of which stocks like Asahi Glass, Saint Gobain, Borosil were in focus, and a Fortis Healthcare who's looking to buy a Meteor Hospital in Manesar was in focus as well. Let's quickly look at a few of the large trades that happened in trade today. So you had names like Nykaa, Bharat Electronics, Tata Steel, IRFC, Jubilant Foodworks, Suzlon Energy, as well as Spandana Spurti. All of these saw some great momentum on the back of the large deals that happened in trade today. So overall, a lot of movers and shakers in trade today, but clearly they did see profit booking in the last hour of trade ahead of the expiry, which is slated tomorrow. Back to you.
Investors have been flocking to the mid-cap and small-cap space, but in the near term, can the space be a safe bet, or should the focus now shift to large caps? What's in store for the broader markets going ahead? Pankaj Murarka of Renaissance Investment Managers shares his views.
India is at such an exciting time in terms of our growth evolution that we find a lot of opportunities across the market curve. So as investors, as long as we are buying right businesses, which is essentially we want to invest into high growth businesses and also high quality businesses, and as long as we can buy those businesses at fair value, we do not care much whether they are large cap, mid caps or small caps. We would go out and invest them irrespective of the market levels and market cycles. Having said that, I would concur with you that when I look at the broader market, I do see some degree of froth emerging in mid cap and small cap space. For investors in general, I would advise them to be slightly more cautious when they're investing into mid cap and small caps, and probably large caps look more favorable in that context.
The Securities Appellate Tribunal has refused to stay the SEBI order barring Zee Entertainment's promoter Puneet Goenka from the boards of 4 Zee Group entities. The court has directed SEBI to file its reply and adjourn the matter for a final hearing to the 8th of September. Sahaja is joining us with more details on the matter.
The Securities Appellate Tribunal on Wednesday refused to stay a confirmatory order of SEBI against Zee promoter Puneet Goenka. The matter would be heard and disposed of finally on September 8. The court has, however, expressed certain concerns with SEBI's investigation. On August 14, in a confirmatory order issued in the matter of Zee Entertainments, the Securities and Exchange Board of India had barred Zee promoters Subhash Chandra and Puneet Goenka from the company boards of 4 Zee entities, namely Zee Entertainment, Zee Media Corporation, Zee Studios, and Zee Akash News. It has also barred Puneet Goenka and Subhash Chandra from any other entity that comes out of their merger or demerger. The order had come in the background of NCLT approval for the Zee Sony merger. According to SEBI, Chandra, during his chairmanship, issued a letter of comfort to Yes Bank that resulted in the diversion of rupees 200 crore fixed deposit of C for the benefit of Z's associate entities. This is in violation of various SEBI regulations. An appeal against the order was filed on August 25. During the hearing, it was argued that the order is unreasonable, unjustified and punitive, as Goenka would be barred from the positions until the completion of investigation and adjudication. As we know, this is not the first time Goenka has approached the tribunal in the same matter. Previously, an appeal was filed against the interim order. However, the court had then refused to interfere with the regulator's order and had directed it to dispose of the matter within 2 weeks of hearing. Accordingly, both Chandra and Goenka were heard on July 31st and an order was passed accordingly.
Amid concerning global economic conditions, can the Indian economy continue to grow with the first quarter GDP figures expected tomorrow? Analysts expecting GDP at a 4-quarter high. How will the key sectors fare this time around? Pallavi Nahata joins in with a preview of the GDP numbers.
India's GDP is expected to grow by 7.8% in the April-June quarter of the current fiscal, as per a Bloomberg poll of economists. Domestic economic activity broadly remains resilient. GDP estimate is higher than Q4 FY23 and is expected to be the highest in 4 quarters. GVA growth is estimated at 7.7%. Now let's have a look at the key components and how they're expected to fare. Growth in agriculture is expected to come in a tad lower than 5.5% in Q4 because of the impact of unseasonal rainfalls. Manufacturing, meanwhile, is set to witness an upswing aided by strong corporate profitability amidst declining wholesale prices. The construction sector could once again see double-digit growth as states and the centre front-load capex. Services are expected to continue to be the largest contributor to growth amidst an ongoing catch-up in the sector. But growth in the second half of FY24 could come in lower than the first half because of factors such as erratic rainfall, narrowing differentials with year-ago commodity prices, and a possible slowdown in the momentum of government capex. Stay tuned to BQ Prime for our coverage of the GDP on Thursday.
Fintech major PhonePe is foraying in the stockbroking space with the launch of Share.Market app. The company intends to tap India's growing retail investor base with its latest offering. Rishabh Bhatnagar joins in with more details.
Well, yes, PhonePe has launched a new stockbroking app called Share.Market. This is the company's third consumer-facing app after the PhonePe app and PIN code. All these new apps, these are all in line with the company's $1 billion fundraise. It had said that it will be using the $1 billion that it raises. It will be using those to enter newer businesses such as stockbroking, lending, insurance, hyperlocal e-commerce, basically all these sub-segments that come within financial services. The Share.Market will be a discount broking app. This will allow investors to buy stocks, mutual funds. The founders of Share.Market have said that the app will be different in terms of the sense that it will also have a quant research layer based on top of the stockbroking app. The stockbroking app will also offer a product called Wealth Baskets, which can be said that it is similar to Small Case, which are basically these curated baskets of stocks and ETFs that basically reflect a single theme or a sector such as FMCG or internet. The managing team of Share.Market will be the same as of Wealth Desk, which was a startup that PhonePe acquired in May of 2022. Another thing that Share.Market said was that they want to ensure that stockbroking becomes a cyclical thing instead of a transaction-based process that it currently is. They said that of the 12 crore demat accounts that are there in India currently, only about 30% are active, while the 70% remain very dormant. So Share.Market wants to make that 70% also very, very active in the retail investor base as well.